All right, guys, we wanted to put together a special quick training for you regarding a hot topic called SPACs, which is called Special Purpose Acquisition Companies. And it isn't something that's new, it's just being used more often. And we really like how this works and the setup for it. We've run through a few tests with a couple of companies. One that we're going to show as an example that we bought in, and we actually um, posted this about DraftKings, which originated from a SPAC company. And so we're going to kind of give you the details, the breakdown of how that worked out, and to show how we've been making money by investing in SPACs through the SPAC stock market, said SPAC market, stock market, and show you some simple things that we've been finding, and just a quick review analysis of our list of SPACs that we've bought into and that we've been monitoring and showing how those go. And we'll give you a couple of ideas of ones that we're going to start loading up with a little bit more so that when you see us call out a ticker symbol for a company that is a SPAC, you'll have an idea of what we're talking about and what our expectations are for those. So let's get into it. And we'll try to make this quick. As you guys know, I can get a little long with it. When I talk about something I'm passionate about. So the agenda, we're going to review what a SPAC is, how SPACs work, and we're going to walk through an example. That example is going to be DraftKings, and then we'll go through an analysis. I actually took a screenshot of my list of SPACs that I am researching. You'll see that some I've gotten to, some I haven't even touched because there's so many, and it takes a lot of time and a lot of work to really dig in and research into these companies and get the 411 on everything that's going on. So before we get going, something we have to do just to protect ourselves before we start, by watching or reading this, you are saying that you understand the following: that I am not a financial advisor, and this is not trading advice. This is a session that is solely for the educational purposes. There are risks involved with any type of investing, and I'm not responsible for your gains or your losses if you decide to act on the information that's provided today. All right. So, what is a SPAC? As I mentioned, it's a special acquisition company. So, this company is built usually from some very successful investors. You'll find CEOs, CIOs, COOs from previous companies that were huge, like Disney, people who are well known for their leadership. So when you're investing into a SPAC company, we're actually following the jockey and not the horse. We're following people with excellent mindsets that have great leadership, that know how to build companies, that know how to take a company that is already in place and take it to a whole nother level. So that's the first thing, is we're looking for SPACs that are led by people who are great at what they do. For example, Peter Thiel, anything he buys as a SPAC, I'm joining, because he has a history of building billion-dollar companies from nothing. He has a long history of doing that. Not to say that everything he does is going to be a winner, but the chance of it being a winner is very high. So my research on his companies tend to not go as far in depth as other companies I invest in, because I have a track record with him of winning. So I just throw that out there. So what happens is you'll have this SPAC, this company that is built. They go through the process of getting an IPO, an initial public offer, where they're actually listed on the top stock exchange. They have a ticker symbol. They do not sell a service. They don't do anything. Their whole purpose is to be a blind pool of cash that is raised by this IPO to acquire another company. So the money that is raised when they actually become a publicly traded company, by law, 90% of all the money they raise has to go towards the purchasing of other companies. So they cannot just take up this bank of money and then go run off. By law, they have to buy another company within 2 years, or give their investors the majority of their money back. When I say majority, it's minus the 10% of the operations costs, things of that nature. It takes money to get this thing going, called legal fees. So that's typically what they spend money on is legal fees, contracts, those type of things to actually get the mergers going. So by law, legally, they have up to 2 years. That 2 years can be expanded, but they have to go through more paperwork to make that happen. And they also have to notify you of this. So you can buy into a SPAC company as a stock, not a private company, but as a stock, as much as you want. Typically, they start out at $10 a share. Pretty much across the board, that's what where they've all started. And I'll talk about what makes them grow and where the big bang comes. But to start out, a SPAC company is just a bank, basically, that holds money, the money that they get from selling off of their shares of stock. How many shares they can sell, that's all determined in the initial public offer. Once all of them are sold, that's it. Typically, there is more than enough to go around, though. So that blind pool of cash, they then take that money and they go and seek out startup companies. They seek out companies that have been around for a while. I'll share one with you when we get to my analysis of a company that's about to be bought out that many of you know very well. And so they go through this process of finding what they are looking for as far as a business. It may be we want to see that they are operating in a positive. We want to see that there's a lot of growth in this particular area. They'll tell you up front what their niche market they're looking into. So, for example, one SPAC may say, well, we're looking to buy out a company in the financial technology area, or we're looking to buy out a company in healthcare, pharmaceutical. Well, you won't find pharmaceuticals too hot in SPACs. At least I haven't seen it. But the electric vehicle market, that's a hot topic right now. And so you'll see that they're trying to buy out companies. And it may be that they may not buy the company outright. Maybe they buy majority ownership of the company and let the managing partner still run the company. Whatever it may be, this SPAC will have a major position in that company by buying into the company with the money that they gained from the initial public offer. And like I said, they have 24 months of typically about 2 years to actually spend the money to buy out a company or merge with a company. Think of it that way. Think of it as a merger. We're finding that they're happening well in advance of 2 years, normally about a year, but you'll hear about what company they're trying to buy out. A lot of times you'll also, once you start buying shares, you get a vote into what company that they merge, they're looking to buy into. Not all SPACs allow this. Some do, some don't. You'll have that information up front when you do your research on the company. One we're looking at right now at buying into, they actually ask their shareholders, okay, we're going to take a vote. This is the company we're looking to merge with. This is how much it costs. Here's the information about that company. Now, mind you, you do have to sign disclosure agreements to be able to cast your vote. And then based off of that, they make a decision whether they're going to move forward with that merger. Once the target company has been bought out, so you're going to have a listed SPAC, you're going to have a targeted company that is currently not on the stock market. So it's a private company that is fully up and running. On the set date that the merger is set to close, they become one, and a new ticker symbol is created for the newfound merged company that is publicly listed in the spot that the SPAC was in. So example, if the SPAC's ticker symbol was SPAC and we had a target company named Target Company, and the day it merged, they then became TGS, Target Company Solution, on the stock market. That's the new symbol. But the price of that stock goes along with it. So if it started at 10 and grew up to 20, then on the day it merges, it starts out at 20 and it may shoot up from there because there's an actual company in place at this point. And that's what happened with our example that we're going to talk about. From there, you are automatically shifted from the ticker that you had for this original SPAC to the new ticker that it has for the merged company and all the shares that you own. So if you own 5 shares of a SPAC and it merged, you now own 5 shares of what the new name of that SPAC is, now that it's merged. And that's the simple process of how a SPAC works. So let's go through an example. You guys keep hearing me talk about DraftKings. This is when I really learned about what SPACs were. So the original SPAC was called Diamond Eagles Acquisition. They were listed on July 26, 2019 at $10 a share. They merged with DraftKings, and as a part of that process, they brought in Michael Jordan as a major, he's a major owner of DraftKings. He bought into the SPAC. And as a part of that, he is also an advisor on the board of this company. So they brought in once again, we're talking about bringing in the jockey, not the horse. They wanted someone that could help move this company, and help it to grow. There's some other things that they did as well as a part of all of this in the background that was going on for almost a year. The trading price of the SPAC, which was Diamond Eagle Acquisition, on the day of the merger was $17.50. Original price was $10. So there was growth in the SPAC when there wasn't even a business in existence yet. All this growth was simply based on the news, the rumor of the company that they were buying caused it to grow. That's the first thing that can make a SPAC grow. The second thing that happened is that they merged with DraftKings. They took on the ticker symbol DKNG. So when you saw it listed, I initially bought in at $13 the day of. I didn't buy it as a SPAC because I didn't know about SPACs that well at that point. I bought it on the day of because I heard of Michael Jordan being an advisor on the team. I also posted it in StreamlineiG to buy, and we bought it at $13. As of today, it is $54.18. 401% growth in 1 year. That's unheard of. So, do all SPACs do this? No, there's no guarantee in any type of investing. But the thing here is, there's a major difference because you're able to get into a company quicker that has already been in business for years, some decades. Perfect example, one of the SPACs that I'm buying into right now is rumored to purchase DirecTV. Well, in most of our areas, we've heard of DirecTV. There's a plus and a minus here because unless DirecTV makes some shifts and changes, what we know is TV is changing drastically to streaming and streaming only. So there's some things that would have to change up with this company, but based off of the leadership that's brought in, if the proper leadership is brought in, once again, the jockeys, bring in the right jockeys and they'll get DirecTV to where it needs to be. I like this because this is a company that has been in place for a very long time that is currently sitting in a lot of living rooms being used for cable television service. So that's one I'm going to show you in just a second. But the idea is if I can buy in at around $10 a share right now, and the possibility of it doubling or tripling on the day of the merger, I like that. Here's the other thing I love about it. You guys know I love investing in startup companies as an angel investor. But with startup companies, the risk is much higher and much greater because most startups do not make it. We're also in the middle of a pandemic, which is minimizing the growth of startup companies. That's why you guys haven't seen us post a lot of startups because there's just, okay, what do you have to offer something that is futuristic, next level, pandemic ready type of product for me to jump on board with it. So with SPACs, these guys are buying companies that are already proven. that are already in niche markets that are growing, that we foresee growing in the next 10, 20, 30 years and continuing because of the new market that they're getting into, like electric vehicles. Everyone knows that by 2025, we should have electric vehicles only. Majority electric vehicles is what you're going to start seeing on the market by 2025. We're almost 2021. We're not talking decades later. So there's a ton of growth potential in that market right now. A lot of these companies are being bought up by SPACs. You're going to see that in the list in just a second. So our example was DraftKings. I bought in at 13 the day of the merger was $13 a share. It's now $54.18. I bought that this year in 2020, this summer. 400% growth in less than 6 months is amazing. So that was our example. So what am I looking at right now, or what are we looking at right now? As you can see, this is the list of SPACs that I am analyzing. I already have the list of some of the companies that are rumored to be the company that they're trying to merge with. Some of them I cannot list, so I didn't even put them on here yet because of non-disclosure agreements. So the ones that I have a non-disclosure agreement on are not on this list. So there are a ton more than just the ones you see. But I can discuss them once the merger is solidified and they know exactly what they're going to do, because it's public information at that point. And at that point, we can disclose it to you guys. So Churchill Capital, they're looking to buy out DirecTV. They're not going to buy them out. They're going to become a major stakeholder in them. I bought one share for testing purposes. I paid $9.75 because I bought them on the dip. You guys know I love to buy stuff when it's on sale. It's currently $10.02. In just buying one share, I've already seen 2.77% gain. It's only 27 cents, but if you look at it in percentages versus money, if I would have bought 100 shares, it would be a different amount of profit in a short period of time, because I just bought this maybe a week ago or so. IPOC is a huge one that I'm seeing a lot of information flowing around about. We bought 2 shares because we heard a lot about this company and what they're doing, and that they're looking at taking over something called Clover Health. Still trying to dig in more, but in one day, it's already seen a 10% growth in one day. I bought it at $12.78. Today, it's $14.78. 15% growth. And they haven't even solidified the merger yet. It should be happening next quarter, I believe. Sometime in the next 3 months, that should be happening. There's one called Switchback Energy Acquisition, SBE. We bought a portion of it because at the time I wasn't sure what this was, what they were doing. I didn't know what company they were trying to buy out. Well, they're trying to become major holders of a company called ChargePoint. ChargePoint provides charging stations for electric vehicles. Huge. That's why the stock price shot up to $41.50 for the SPAC. In my personal portfolio, I'm buying up this one, SBE. I'm going to buy multiple shares of that, not portion, because if it's doing that as a SPAC, what is it going to do once the merger actually happens? Now, it's down 5% today, fine by me, as far as the SPAC stock price. So I'm watching that one heavily. Another big one, LCA, Landcadia Holdings. They're looking to buy out a company named Golden Nugget. I bought 2 shares, and on 2 shares at $13.85, it's currently $23.80, and the merger has not happened yet. This is just off of the news of who they're going to merge with. That was a 71% gain, 72% gain, and the merger has not happened yet. AMCI acquisitions, we just got that one yesterday. CLA, everything below all the way down to APXT are shares that we just bought yesterday for testing purposes, all the way down that line. So you'll see where I bought 1 or 2 shares of each one for testing. And within 1 day, I bought these yesterday. And within 1 day, if you look at CLA, the daily change, it went up almost 11% today in 1 day. I bought it at $14.06. It went up over a whole dollar in 1 day. So SPACs can make you money off of rumors, off of the moving of the market that they're buying into, so what their niche is. And you'll see a lot of these are dealing with, if you look at the companies they're trying to buy, these are all automotive, electric vehicle companies. Something dealing with new energy is huge right now. You'll notice that they're growing in 1 day. Only have 2, one which was LCA, Lancadia Holdings, went down less than 1% overnight, and then SBE went down 5% overnight. That's fine because it shoots back. I've been watching these for a while. They shoot right on back up. As you can tell, because of the overall gains that you see. Anything in green is what, if it's 5% or more in profit or percentage change as far as the daily change, my spreadsheet automatically turns it green. If it's -5% on either of those, it automatically turns it red. And that's how I can quickly glance and see how things are going. So this is the active list I'm working with. You guys are free to look these up. There are a couple that I already know that I'm going to buy more of. GIK, Gig Capital 3 Inc. I am going to buy more of those in my personal account. They're buying out Lightning Motors. And like I said, in 1 day, 10% change, just like that. I'm buying more of CLA, which is Colonnade Acquisition Corp. I like LCA a lot, but I'm holding, I have some already in my personal account. I'm holding to see what's going to happen with their merger. I'm not going to buy any more until closer to the merger date. So the things that I'm going to start posting in StreamlineiG for you guys is when I find something that I like after a little bit of testing period, which right now looks like 1 day, maybe a week. Once I get more information as far as what company they're going to buy, I will start posting those, and I will notify you that they are SPACs. So you will know, okay, this is a holding company. They do not sell a service. They don't sell goods. They merge with companies and become major owners of those companies. You're buying the jockey, basically. And that jockey goes and finds a horse called a company. When the merger happens between the jockey and the horse, the two will have a new ticker symbol. Now, this is something that what will happen after the merger. And it's important for me to tell you guys this because I was looking through my own personal portfolio and I knew I had a company. I was going, what happened to this SPAC that I had? IPOB, I believe is what it was. Well, after the merger, it took on a new ticker symbol. And I had to go and actually find the name of the company that they bought, had it on my list, and oh, okay, that's what happens. So what happens is after the merger takes place, you'll have a date of when it's official. A new ticker symbol will be created with the name of the company that they bought out or took over. So it's just a flop, a switch of tickers. Now, someone asked me prior, well, will it switch over to the ticker symbol of the company they're buying? The answer to that is no, because they're not buying companies that are currently, I haven't seen it happen, where they're buying out a company that is currently on the stock market. They're buying companies that are private companies that instead of going the route of trying to get an IPO, which can take years, a long time, and a lot of money to happen, they may take the route of, okay, we can get this done in a matter of months with a merger, with a SPAC, and instantly we are on the stock exchange with a ticker symbol. So it's a quicker path to actually getting on the market. And this is proven well for startup companies. If they are a good company in a good niche, one of these SPACs will find them and it will help them get on the stock market much quicker. So that's what a SPAC is. Here's my analysis. If you guys would like to have a copy of this spreadsheet, I don't mind sending it to you. If you'll just put it, I'm going to post this, and if you will put it in either the comments, yeah, put it in the comments, or either send me an email. Send an email to Demetria, Demetria at StreamlineiG.com, and I'll send you a link. No problem sharing this. So you'll see what I'm at. Well, this is our research list. Guys, I want to make sure this is clear. This is our research list of SPACs that we're looking into, that we're testing. So we're not saying these are go-getters. We're saying these are test companies. We're only buying one or two of them to see how they go. But we've seen the success, so much so that we're going to start pushing out, okay, these are the SPACs we're buying. And if you choose, like we said earlier, it's up to you what you decide you want to buy, but the information is what we're giving you, the education about how this works, so everybody has opportunities. So that's it about SPACs. I try to keep this short. I don't know if I was successful. We're about 30 minutes in, but if you have any questions about SPACs, please feel free to send me an email. Please feel free to drop it in the comments and I'll respond. Have a good one.